What's up, people? How are you doing today? We have the FOMC meeting today in 16 minutes. Welcome every single one of you. My name is MBL. I'm a Forex trader. I'm here to help you, guide you through this major event that we have all been waiting for the whole week. The whole reason for why we have been looking into this week is the FOMC meeting. What is FED going to do? What is Jerome Powell going to say? Is he going to acknowledge that the economy in America is improving? Is he not? Well, we are all there to hear, to know. If you know me already, I have been trading as a Forex for seven years. I'm into stocks on the side, but mainly Forex. I also cover gold, oil, crypto, and whatever you guys want to talk about. But today it is FOMC meeting. Today we're going to look into some tools that I also use behind the scenes. You also able to get in past too. So if you guys can hear me today, yes, my microphone is on. Then we're all set and go. How are you, people? We have... Oh, wow. There was a lot of people here. Chief, how are you? I'm absolutely fine. Hello. Arkaz. Mohammed. Hello. FOMC praying for bullish momentum. Boom. Good morning from sunny Los Angeles. Good morning, Dave. Good evening to me myself. This is Dave B. Well, very much welcome. I want to visit your place. Los Angeles sounds amazing. We just had snow the other day. I live in Norway. Nice to meet you. So, what do we know of what is going to happen? I need to pull up one of the articles I gave you guys today. Was it today or was it yesterday? I think I gave it yesterday, and news. I gave you guys this preview to the FOMC meeting minutes posted by the fxstreet.com. Pretty reputable sometimes. They do speak sometimes as well some truth. So that's great. Next month is meant to be good for dollar. Hello, sir. Dave, you're... Hello, sir. Waiting to hear from FOMC and how that would affect gold. That is definitely one thing to look out for. Anil asks, how are you doing, bro? What about you? I'm doing very fine. As you can see, I'm alive. I'm speaking. You know, no matter if I lose a leg, I can still speak. Looking so much excited. You know, I'm excited. Who shouldn't be excited? Because this is our God. This is our Forex God. This is our guru, the almighty Jerome Powell, is going to tell us what he's going to do. Okay? So, you're much welcome, Los Angeles. I will give a tour of the city. So, just a fun thing about where I come from. If you Google my country, Norway, you know, this is the country. We live in this place. And then if you then take the other thing that we're experiencing right now, this is kind of the situation, you know? So, you know, yeah, it's a bit much. Anyways, back to trading. Here we have the 12 major banks and their forecast for the FOMC. This is published today, this morning at around 9 a.m. So well in advance. We have, first of all, we have Danske Bank. Danske Bank is expecting the Fed to keep the monetary policy signals unchanged in some of the interim meetings without any updated forecast or dots. Okay, so they're expecting no change. But will it? We will know. The Fed is outcome based, not forecasted based, which Jerome Powell has been explicitly been saying over the time. So okay. Based upon our very reduced macro positive outlook, we continue to see the Fed moving in a more hawkish direction later this year. So they're not expecting hawkishness, not this time around, but okay. Then they are expecting euro dollar to go to 115. Well, that is, and the 10-year T-note. The 10-year T-note is the government bonds in America with 10-year expiry. at 2%, and currently it's around, I don't know, 1%, 1.5. What is it? It's 1.64. So next one, capital economics, should be unlikely to bring any major policy. ING, no change. The rate should be the same. The purchases should be the same. TDS, I don't expect any substantive new signal on tapering or tightening. NBF, the meeting should be a relatively quiet affair. Okay, so that's pretty interesting. All the banks are saying we don't expect anything. The Fed is unlikely to rock the tapering boat. We expect a small technical hike, around by 5 basis points, to the IOER to prepare to continue for dollar influx liquidity during May. What did they just say? Did they just tell us that they're... Did they just tell us... Did they just tell us that dollar is going to go bullish in May? Maybe we should look into what these people are actually saying sometimes. You know? The other thing here is, okay, ANC, despite the high reflationary economy, the Fed is expecting to remain patient. Deutsche Bank is largely served as status check on the economy recovery relative to substantial forecast upgrades to the FOMC meeting unveiled in March. The SIBC says that they won't change any interest rates. They won't change any interest rates and its language. Now, I'm not going to cover the rest of them because they're all saying the same thing. Here is my perfect tool. Did you know this tool? This is something very interesting from 2020 in March. I think we were 275. I think we're 275. Current rate was around 275. 250 to 275 range. Every single day in March 2020, this one was updating, going lower, 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 lower. It was absolutely crazy. Every time I could click refresh, was higher percentage, and by the time 3rd of March came, and the US Fed lowered the interest rates on 3rd of March, it was already priced in. Because this, my friends, is important things for the future. This is the CMA group. They are tracking the amount of orders between banks being traded, or trades between banks. What are they believing? How are they positioning the market in terms of the interest rates of the Fed? Currently, we have a target of 0. The current is 95% percentage that Fed is going to hold 0 to 0.25. Okay, that is current meeting. But if we go out to like 3rd of November, maybe it's not the same. It's just 91. If you go to December, it's 91.2 as well. But as you can see, there is some banks are thinking maybe this year. So we are not always looking into what is going to happen now, but what is going to be happening in the future. Because past interest rate hikes or cuts has been priced in, or tried to be priced in, 3 months ahead. The reason why the dollar got so strong back in February, the market moves, was because they were looking into this. See, now this is now the dot plot. The dot plot is where the members of the FOMC, the Federal Open Markets Committee, are expecting and voting where they believe when they're going to increase interest rates. As you can see, this is 2020. Nobody expecting, because it already happened. The consensus is already in. Now, no change in 2021. There is the red dot indicates the effective rate, and the blue dot lines is median protection, and the black one is how they feel like. So there was one guy thinking, hey, maybe 2022 we might have a rate hike. And 1, 2, 3, 4 thinking maybe we have a rate hike. One thinks even 1.5 in 2023. And that's pretty interesting, to be honest. And longer run, everyone think everything between 2 to 3% interest rates in America. Is this important for you? Absolutely, very much. This is the whole foundation of us as traders. If you're into stocks, if you're into Forex, if you are into any kind of investment, you need financing. This is the cost of your financing of businesses, of the economy, of everything, basically. So LIBOR says, good evening. I think it will do to seasonality. The other thing is, there is a meeting back in... There's a meeting in June, 16th of June. Just want to point that out very quickly right now. Is that this is the end of this trading year, no, the first half of the trading year. After 16th of June, we're going to have lower volume, lower trading activities, swing trades might not be working anymore. So if you're thinking, should I be having a vacation this year? Maybe around June, after June 16th, maybe around 20th, to until late July. Might be the time where there's low volume, not a lot of trades, mostly range bound. You might get a trend, but it's definitely not secured. So, Boss, Forex Pro asks, what about gold? Well, we will go into now to find the Federal Reserve website. You know, we need a website. We need their... Hardik gave me the... Did you give me the YouTube thing? They're going to be live as well. Let's put that up. And we're going to... Should we have that as a background noise? Maybe. How's that background noise for you? Yeah, okay, we can put those as background noise. Okay, so we are rating them in 34 minutes. But in 4 minutes, there's going to be the statement. So we need to be ready, willing, and able. All right. Okay, so you asked about gold. Let us pick up a chart here and put that away. And then say, go, go, gold, 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 gold. So, how is gold going? Well, this is my charts, by the way. I use pivot points, and I use trends, and I use reversals. I posted currently, I think it was, did I say for April? I don't know. Hardy, can you tell me, did I say this is going to go up in April? Do you remember that? I need to know. There you guys are. Did I tell you that, no, that was not the one that I wanted to do. Did I tell you gold was going to go up in April? After that, we are now a bit subdued. Of course, 2,000%! Boom. You know what? Torga, welcome. You said all commodities well. I probably should find that video one day. But, you know, here we are in April. This is 1st of April. This is April. Whiz it up. Maybe I should find the video. You know, pretty good April. Now, what will this FOMC meeting do for us right now? Let's take away my pivot points because, you know, we hit some targets and we went up and we hit some targets too. And then now we're going down again. And we are a bit low. I don't like this one. This can turn lower based upon the the technical move right now. So if I go and find out where this watermark is, that would be great. So I have this as support. I don't want its price to go any lower whatsoever. I definitely see this as resistance. I definitely see this as resistance. So if you point out the prices, sorry, I do not want price to go below 1766, but I would love it to go higher and higher and higher. So that is our line in the sand for buyers. You know, we're looking for buys. I won't see a pullback on gold. Strong levels. Yeah. Okay. So here we have this one on the side here. Let me just take that away. Now we have that one coming in. And then we have to go to Fed meets Fed thing. And then we need to update that one in a couple of seconds. And then we need like FX Street. I'm not a fairly bad FX Street, but that would be great. You know, some income wouldn't be, you know, appreciated. That was just a joke. Okay, so we have the Fed here. We have the Fed here. We have the Fed here. We have the price here. Okay, great. Okay, Nail. You didn't want to do that. Cool. So, why are you so far away? So, so here we have gold open. We can have maybe also Euro USD very time soon. Maybe in a different one, but yeah, that's go time. I can see the chat, but that wouldn't be too terrible either to just move that one over there. Let's go. So I currently have a dollar bearish move. Currently have a dollar bearish expectation. So let's see what is the move right now. The chart, we are pretty constant, nothing new. We have to read the newspaper. What is the news telling us? What is the news telling us? Anything new here? Here we have it. Whoop, whoop, whoop. It's out. It's out. So, we are fresh from the start. Let's get into it. The Federal Reserve is committed to using full range of tools. I will take that away. Fed is going to use it. The Fed is using full range of tools to support the US economy in this challenging time, thereby promoting its maximum employment and price stability. Great. Now, if we jump over all of these things, and this is COVID, the path of the economy will depend significantly on the course of the virus, depending on the progress on the vaccination. All heard that before. The ongoing health crisis is going to weigh on the economy and the risks on our economic outlook. Still the same, nothing new here whatsoever. The committee see... Wait a minute. Wait. Okay, I just jumped over it. The sectors adversely affected by the pandemic remain... The sectors that are adversely affected by pandemic remain weak but have shown improvement. Inflation has risen, largely reflecting transitionary factors. Overall, financial conditions remain accommodative, in part reflecting of policy measures to support the economy to the flow of credit to US households and businesses. The interests are the same. Everything is the same. And let's jump on another thing that I also want to jump onto you guys. Just seeing if I miss something. I always have a different one. Dollar goes higher. Let's go into gold and see what gold does. We have some uncertainty in the gold price. Not really great price action there. Let's see if we can get some dollar strength. That was XBXY. Here we have the DXY. The DXY is spiking up a bit, but the trend is still lower, people. The trend is still lower. We have no higher high. If we are going above 91.20, that would probably be more significant for me as to my positions, my personal positions. Only my personal opinion, by the way, if you're wondering. And for everyone who is here right now, if you're into more fundamental trading, day trading, stock trading, forex trading, gold trading, please hit the subscribe button. I will give out my forecast on Saturday. I will be live on Sunday, every Sunday, by the way. And I'll probably be live tomorrow as well to help you guys becoming a better forex trader. My system is 1, trends, 2, reversals, 3, I use pivot points. That's all. If you are up for that, that would be great. Currently, we have DXY is currently unchanged. It is currently at the same candle. No big spike, no real biggie. On DXY, we have maybe a reason, is it 17? 17 points? Nothing much, nothing bigger. Federal Reserve rates will be announced at what time? Can you write in English text? I don't know English and I'm using translation. Hardik, can you type what the most of the things that I'm saying? Rate and change. No new thing. No new policy. No new policy. No rate change. As expected. DXY shows no direction. Yeah, that would be great. So right now, we now have to go into what is really this policy? What is really the Fed trying to do? I want to mention to you guys, this policy change happened back in March 2020. At what point did what happened then to the market after the March move? Let's go back to March. This is the dollar index. This is March. We have fallen ever since, and the policy since then has been unchanged. Okay? It has been unchanged ever since that time. My big question to you, do you then think that we are going to continue to fall overall? We have had some highs. That happens. Are we generally going to continue falling as long as the Fed is going to continue to hold their current policy? I believe so. Just the headlines of what I've said, that's all. That would be great. So, coming into, yeah. So I do expect dollar bearishness to still continue. I know some of you guys has been shorting dollar. I also know that some of you have been buying dollar. I don't know if that is something that you will continue to do, as we are continuing to see no rates change. We are continuing to see the Fed still promoting the economy, still no new change to the interest rates and the forecast. And did I miss that? Fed will continue to increase bond purchases by at least 80 billion. And treasuries, are they actually doing that? They're going to increase. In addition, the Federal will continue to increase its holding of treasury securities by at least 80 billion per month and 40 by agency mortgage-backed securities by 40 billion per month. Is that more than the previous one? Fed. I think that's more. I think that's a change. So if we go into monetary policy, recent statements, that is back in June. Calendar, back in March, Fed meeting. Back then they said they're going to do what? Will continue to increase holdings of its treasury securities by at least 80 billion per month and 40. Okay, so they're just continuing whatever they're doing. Okay, I almost thought it was something new. That would be something great. That would be something huge. But it's just the same thing as always. Okay, we go back to what we're doing. They're going to they're trying to achieve maximum employment and interest rate of 2%, recent over long in the run. Okay, what does that mean? There's two things you need to look at when you're looking at the economic calendar and news to trade, sort of say. It is the unemployment rate, it is the inflation, the CPI, the core CPI. Consumer Price Index, X foods and goods, I think it is called. Somewhere around there. That's the number you should look at. I believe it's currently around 1.3 or 6. I'm not sure at the moment. Those are two numbers you need to look at. And unemployment is around 6%. When before COVID hit, we were 3.5. So we have still a long run to go. But we have come from very far up. I think it was 14% at max. So what is really happening here, we're trying to boost the economy, shoot it up, have it overshoot a bit, until we kind of find it back into. So we're kind of an airplane. We have the Fed as the engines, and they're trying to like lift up. They have like this. They have come to V1, so they're trying to lift the plane up, but it's not really jumping yet. So what's really happening here right now is that's what they're trying to do, trying to get a core CPI to 2% and unemployment back to 3.5. It hasn't really happened, but other than that. Now we have got a request for gold. We can look into gold again. That is okay by me. We can look at by gold. The dollar index is currently falling a bit on the day, but still fairly unchanged. Gold, there you are. The gold reaction is actually bullish. We're actually rising. I said we need to be above 1766 movement. So pretty much everything is good. So if you want everything is goof, if you are into this kind of a trading style where we're taking 200 to 500 pips per trade, back in December we were shorting the dollar for November 6th, 4th, 5th until December 3rd. We made 10,000 pips. If that is the community you want to be a part of, please hit the subscribe button. It is down below here. That's the only thing that I'm asking for you today. The only thing. That's the last time I'm going to mention that today. The reason why I want you to do that is because you then will get notified whenever I will say anything stupid again. Woohoo! Hardik had... I think Hardik could still have some positions in. Look at silver. It bounced at the bottom of the trend line. Let's do that. Boom. And yesterday, I'm going to trademark Safe Boom. Instead of Safe Moon, I'm trademarking Safe Boom because my style of talking is whenever we do great, we say boom, you know, and Safe Boom. If you're looking into silver, yeah, here we have silver. I want this to rise in April. That is the first point. First point is bias, okay? Then we need a trend. What is the trend? Trend, not friend. Trend. And then we have to look for reversals if it goes against us, okay? So, here we have an uptrend. Here we have a range. We have an uptrend. We have a range. It went up, we made range, we went into range. So first of all, we are thinking this one to go up, and the current rate is kind of range bound. So we are currently range bound. I would then say, I would hope, by the help of the Forex god, the Jerome Powell, that we're gonna hold 25.72. Is this the 5? Safe Moon! Where did I say it? I said it that there. That's what I said it, and I'm gonna do that. Come on, bro. I'm gonna type it in. Come on, type it in. I can't type it in. Why? Come on, bro. Are we beginning of the 5th wave? Rev Mad says. I absolutely have no clue about wave theory. There's this guy called We Trade Waves. I've actually had a personal call with him, and he seems like a great dude. Absolutely fantastic dude. We came to the same conclusion. I can't explain his system. I do apologize for that. But I can tell you I come to same entries, same targets, and We Trade Waves has been, as of late, as far as I remember, not always right about his analysis as of the past week, as we have done pretty good on the euro, I would say myself. But yeah, that is great. Let me see, there we are. Okay, so another thing that we then need to look into is what is going to happen next. if we look at my pivot points, you know, it might be, you know, it might be a fun thing to look at. Okay, so if we then say that this green zone for every week is the buy zone. So I'm going to put on some arrows. This is the buy zone. Nothing. This is the buy zone. Okay, here we got an entry. Either here or somewhere in between. Okay? Now we have an entry. Oh, this is the buy zone again. Here we have an entry here or here. Nothing there. And I will take them away afterwards. Here we have the buy zone. Yeah, around the same price. Again, either here or here. So I'm now going to take away all the other things that is unnecessary for this chart to be. That is actually okay. That is a. Oops, I see. That was the wrong one. And yeah. So this is the potential chart of how you can. How your trading can be looking like. Probably also maybe if you took something in here, maybe that would be somewhere here. But yeah, other than that, great. You can now, according to my system, you can be in profit. I'm saying you can be is because different traders has different entries and different patience. Some buys high and losses. I'm sorry about that. But generally speaking, that is what my chart says. Ever since 1st of April. And then you can have more trades in between. You can have day trades, monthly trades, whatever. I'm just going to do one thing for purposes only. What you then want to see is market coming into the buy zone. That's all great. You want a higher high, higher low. You can buy that. Higher high, higher low. You can buy that. But now it goes into this zone here. I would call that not neutral. I'm going to call that neutral. I'm not going to spell the rest of the thing because I can't really draw. So. Silver, in my opinion, is currently range bound. As we have not gone higher as of yet, I would then wait for maybe tomorrow morning and then continue it higher. Tomorrow morning, I mean around 2 hours, I guess, around 2 hours before London Open. That's what I would guess. Renko charts, is it good to use as an indicator? Imran asks, and very good question. I've been pitched about Renko. I haven't really tried it myself. So I can't personally say, oh, it's an amazing thing to look at. I can't. I do apologize for that. But I can say it might have something for them if you try, and as long as you become the expert of it. Whatever you choose in life, as of general, become the expert. You know? Become the expert. Trade knowledge. I have courses, I have mentorship, I have free classes, I have a Discord, I have YouTube. But you know what I promote? Even though I profit from having students, find knowledge. Go find knowledge. I give you guys knowledge over the day. Every single day I give you knowledge. The reason why? Because you're supposed to become the expert. I want you to become the expert. If my system works for you, I don't know. My system is told by many people very simple. Maybe it is, maybe it's not. I don't know. Find profitability. Find a system that works for you over time. If it's day trading, if it's swing trading, or position trading, I do all three of them. Try to at least. Sometimes, mostly. I can hold a trade from August until December. Same can you do too. I can hold a trade from morning to evening. The same thing can you do too. The difference between me and you in day trading, I hold my trades for long. So if I can get entries early into the move, that would be great. Here we have EURUSD. Another one from 1st of April, we have said buy. I have entries around 1760, 1740, give or take. And as we have continued higher, there has been day trades, and day trades. And I took some losses this morning. Pretty bad. I'm pretty annoyed about that. I shouldn't. But as we go higher, people, we add and add and add. Look at this target. Pretty fantastic, right? And now we're looking into 2173. We have 12 minutes again until Powell is going to talk to us. We're going to be amazed. We're going to be what do you call it? We're gonna be listening. So I'm just talking as fast as I can until that time. Very much great. So for today, I am. Oh, okay. What am I up? On New Zealand dollar, I am up from. I'm up from what price? 72.14. 14. There's 14, give or take there. I'm up from here. That's actually a trade from yesterday. And we are up, give or take, 32 pips. Boom. Just a small break there. I just need to have some drink. In the meantime, I do hope. Do you have any questions? Oh, my lord, how can I be so stupid? Is there any questions? We're going higher, we're going higher, New Zealand dollar. Oh yeah. Boom. And that's my happy dance. Are we looking for strong dollar in this month or next week? Okay, I will ask that question soon. I haven't really mentioned that to anyone. I should have probably mentioned that to my mentorship students first because they're supposed to have them in my brain first, but that's why. I expect for May some dollar bullishness. I don't think we're going to go into May and say, hey, there's not going to be any dollar bullishness. Current expectation for May is range. We're going to have 1 or 2 weeks up and on dollar and 1 week's thing down. It all depends if we now are going to, if you skyrocket today, hit a target today or tomorrow, we might see a reversal. The other things, as we come into May, we're going to be high. We're going into where the sellers want to come in and kick us down. That is an issue. So we're also going to look at the COT, where the hedge fund managers are positioning themselves on Friday. They reported on Tuesday, so we'll see that on Friday. How they did that this week as well. Is there more sellers coming in, more buyers coming in, dollar sellers on New Zealand dollar, for example? I don't know. But currently, we are just making money as it goes higher. Great, fantastic. We just went up a bit more on the day. Pretty good. Yeah, we just went up 50 pips as well. 5 pips as well. What is target for New Zealand? Do you have any tutorial for pivots? Massimo, I think I'm actually going to do that. Maybe I will do that. Actually, I will make a video on that. I think I will do that today or tomorrow. I think that is actually quite a good idea. There's a lot of people asking about it, and I will do so. For those who are coming into my... Oh my... That is actually my realistic... I haven't looked at this chart today. Sorry. Bro! We're making money! We are... flying! Alright. We are flying, ladies and gentlemen, when you see this cat. Sorry you're late, Harold. You, as a YouTube member of my channel, you're always excused. You are my VIP. If you come in as a YouTube member, they pay anything from $5 a month. They also get a fundamental analysis live every Sunday and some discount on my merch and priority in the chat if they're talking. You know, yeah. They're never late. They're always on time because they are the VIP. I love them as much as I love you. But coming into my family, there's always patience, there's always love, and there's always happiness and a smile and laughing guru. Somebody calls me guru. Somebody calls me Viking Pip Master. I don't know what you call me. But I will be humble and say there has been losses along the way. Do not worry about that. New Zealand dollar target, I think I've said that before, Heartache. The target for the week is 72.66, and target for the month is probably 68, if I remember right. 60. Has it moved? Well, maybe that's Australian dollar. It's 73.28. So another give or take 70 pips up. Your merch arrived, Harold. If you're happy with it, I hope you're happy with it. Please post a photo of it in the Discord channel. That would be absolutely super duper awesome. I moved the camera. Sorry. Whoops. Sorry. Fantastic! Okay. What else were we supposed to do? Australian dollar is currently green on the day, currently green on the hour, currently green on the 4 hour, and we are going higher and higher and higher. We are going higher. I kicked the camera, I'm sorry. 21 likes today. Oh wow, thank you guys very much. I do appreciate every single one of you. So now that we are soon need to go into the FOMC thing, where are you guys? We're still just waiting on them, you know, waiting on them. I have one notifications what that's all about. That is Trader Nick. Yeah, I do follow other traders if you're wondering. And he might be a good dude. You know, if you're Trader Nick, if you follow Trader Nick, maybe he can rate me one day and give me some followers. I don't know. He doesn't have the same system anyways. But yeah, I follow other YouTubers if you're wondering, just, you know, to see what's going on the planet. But they don't have the same system as me, so that's why. Do I have a signal services? No, I don't. I do apologize for that. That is absolutely terrible of me. How can I do that? I do apologize for that, but yeah. Yeah, of course they're going to maintain. Product policy voted. So there will be a meeting minutes in a week's time. Then we'll see a lot more of what they've been talking about for the past 2 days. And they're actually asking real businesses and real surveys, not real surveys, but actually real businesses about what they think about the economy as well. They're also tracking the same. They're tracking the same numbers as we do. Did you know that? So yeah, CPI important, GDP important, personal income they're looking into, core personal CPCE they're looking at, you know. The same thing as you're given for free. There is no other, what do you call it? Oh Jesus, help me. There's no hidden thing. Everything is for free if you really want to. Jackson, good evening, my first time here. You're very much welcome. Where are you from? Hello, Trader Nick, his fundamental is off. Actually, I don't know whether. Well, I don't think he trades fundamental, and maybe that's the reason why I don't have 1 million subscribers. Another thing, I don't post a lot of YouTube videos, but I don't know. He has 4,000 people on his lives. Not 4,000. He has 4,000 views on his lives. You know, good on him. Good on him. Good on him. Do you know what? Do you know what I think of myself? Maybe it's a good thing to be a small thing. We have just risen up to... We just risen much more. I don't know. I can calculate. It's an odd number of my orders. I don't know how many pips I've done. I need to... Maybe 40? Coming close to 40 now? Something? Can we short use the yen? No, you cannot. Maybe you can. Let's check. So 2 minutes left to FOMC meeting minutes. 2 minutes left to Powell supposed to talk. And I told you guys on the buy side, please take profit if you have been buying this one. If you are a buyer, take profit, okay? If you are a buyer, please take profit. That is as good as it can be with my strategy. It is a pip difference. I don't know how close that is. That is so close I don't even know. If you want to short, use the end. There's no need to come to me and ask what is going to happen. You do you. You're the chief in your life. You are the guru. I'm only going to tell you that currently, that's just a high. That's not a bearish trend. Stocks, long or short MMC. All right, we can look into stocks as well just for the past few seconds. We have a long bias on stocks, and we are thinking for the next month we will be buying stocks S&P 500 at around 4125 to 4100s. Down in this area, this is where we're looking for minimally. So yeah, we're just waiting patiently because every single month, okay, let's find that arrow. Every single month, 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 we're looking to buy it, and every single time we buy it is at a low. Can you imagine that? The system that we have allows us to buy the bottoms in an uptrend.
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, my colleagues on the FOMC and I kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue powerful support to the economy until the recovery is complete. Widespread vaccinations, along with unprecedented fiscal policy actions, are also providing strong support to the recovery. Since the beginning of the year, indicators of economic activity and employment have strengthened. Household spending on goods has risen robustly. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also increased. Spending on services has also picked up, including at restaurants and bars. More generally, the sectors of the economy most adversely affected by the pandemic remain weak, but have shown improvement. While the recovery has progressed more quickly than generally expected, it remains uneven and far from complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since March, progress on vaccinations has limited the number of new cases, hospitalizations, and deaths. While the level of new cases remains concerning, especially as it reflects the spread of more infectious strains of the virus, continued vaccinations should allow for a return to more normal economic conditions later this year. In the meantime, continued observance of public health and safety guidance will help us reach that goal as soon as possible. As with overall economic activity, conditions in the labor market have continued to improve. Employment rose 916,000 in March, as the leisure and hospitality sector posted a notable gain for the second consecutive month. Nonetheless, employment in this sector is still more than 3 million below its level at the onset of the pandemic. For the economy as a whole, payroll employment is 8.4 million below its pre-pandemic level. The unemployment rate remained elevated at 6% in March, and this figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. Readings on inflation have increased and are likely to rise somewhat further before moderating. In the near term, 12-month measures of PCE inflation are expected to move above 2% as the very low readings from early in the pandemic fall out of the calculation, and past increases in oil prices pass through to consumer energy prices. Beyond these effects, we are also likely to see upward pressure on prices from the rebound in spending as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transitory effects on inflation. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above 2% this year would not meet this standard. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since March 2020 has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our goals, and it is likely to take some time for substantial further progress to be achieved. Our guidance for interest rates and asset purchases ties the path of the federal funds rate and the size of the balance sheet to our employment and inflation goals. This outcome-based guidance will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery. Thank you. I'll look forward to your questions.
From the last press conference, is it time to start talking about tapering yet? Have you and your colleagues had any conversations to those effect? Thanks.
No, it is not time yet. We've said that we would let the public know when it is time to have that conversation, and we'd said we'd do that well in advance of any actual decision to taper our asset purchases, and we will do so. In the meantime, we'll be monitoring progress toward our goals. We first articulated this substantial further progress test at our December meeting. Economic activity and hiring have just recently picked up after slowing over the winter, and it will take some time before we see substantial further progress.
Hope you're taking notes, people. I mute myself. I don't know why I didn't want to go away. So tapering, no tapering. Well, great.
Okay, hi, thank you so much. My question is about what's going on with the virus and what if we don't reach a level of herd immunity per se? So in your scenarios, thinking about the outlook in the economy, do you have a model where you might start to still normalize policy, even if there's like a baseline of infections still going on? Or how can you talk about how you're weighing those things?
Yeah. We have to leave questions about herd immunity and what that looks like to the health experts, but I would certainly say that what matters the most to the economic recovery continues to be controlling the virus. The economy can't fully recover until people are confident that it's safe to resume activities involving crowds of people. There may be people who are around the edges of the labor force who won't come back in unless they feel really comfortable going back to their old jobs, for example. And there may be parts of the economy that just won't be able to really fully re-engage until the pandemic is decisively behind us. But we've articulated particular guidance for tapering our asset purchases and for lifting off and raising interest rates. So for asset purchases, we've said that we would continue at the current pace of asset purchases until we see substantial further progress toward our goals. So, and that is what it is, substantial further progress. For interest rates, as I said a moment ago, we want to see labor market conditions consistent with maximum employment.
Substantial. The word substantial. That is a big word to use for the Fed. I'm just saying.
Has to do with the virus. I will say, though, as I started with, the path of the virus is going to have an effect on our ability to achieve both of those tests.
But yeah, he didn't want to do that.
Hi, Chair Powell. Thanks for taking our questions. I wonder if you could talk a little bit about that test for raising interest rates that you just elaborated. You've obviously made it very clear that you want to see improvements in the real economy, in the real data, and not in just sort of expectations data before making that move. But I guess I wonder what happens if inflation expectations were to move up before you see some sort of return to full employment. It seems like a lot of sort of the stability in inflation has been tied to the fact that those have been so low and stable. And I guess I wonder how your reaction would be, or sort of how your reaction to that is how you're thinking about that.
Right. So it seems unlikely, frankly, that we would see inflation moving up in a persistent way that would actually move inflation expectations up while there was still significant slack in the labor market. I won't say that it's impossible, but it seems unlikely. It's much more likely that we would, having achieved maximum employment conditions, we'd also be seeing 2% inflation and be on track to see inflation moving above 2%. They tend to move together. So that's not to say inflation might not move up, but for inflation to move up in a persistent way that really starts to move inflation expectations up, that would take some time. And you would think that it would be quite likely that we'd be in very strong labor markets for that to be happening. If that actually were to happen, though, there's a paragraph in the statement on longer run goals and monetary policy strategy which says that when the two goals are somewhat in conflict, we weigh various factors, including the time it would take to get back and forth. So it doesn't really tell you what to do, but it tells you that we will weigh those two.
All right, people. So what is really the thing here with this Powell guy? What is really the summing up? What is like the takeaways? He kept himself to the script of what he's already been saying. Nothing new, but what is really great here is, at least on the reaction, we are seeing a new lower low on the DXY. I just want to look at the market reaction as well today. We're looking at a new lower low on the DXY. We're looking at a new, almost soon, new high on Aussie. Euro is absolutely fantastic. Clap, clap on that. Very diplomatic, very straightforward, keeping himself to, as I'm reading into what he says, and how he says it. He says he's very confident. He's not nervous. He's not erratic. He doesn't look like he is about to break. So this is a very confident, very strong performance as of he is confident in whatever he's doing right now. What I do want to mention is that what we're looking for in his statement and his answers to the journalists is the improvement in the economy. And I did highlight that, I think, in the in the thing that they published is that inflation has risen, largely reflecting transitionary factors. So inflation has gone up, but it's not necessarily because of their actions, but it's actually just because of seasonality. It tends to do that around this time around. So that what he then means is it might not be that good in June or coming into August when we are looking back in June and July. June and July, at least in Europe, it's a downturn. It's the summer. So you don't have that maximum, at least not in Norway, where I come from. You have public holiday basically in the whole of July. So you will have lower productivity. You will have lower production. You will have then lower sales. And if you don't have people in the office to do their jobs, then you don't really have any orders to fulfill either. Then you're just down to then you're more down to what consumers do. Me and you, we go for holidays, yes, but that doesn't take up for the seasonality of businesses going out, manufacturers going down for holidays. At least that's what happens in Norway. If it's how that happens in America, I haven't been to America, but I guess it's the same thing too. They also need to have a holiday. Germany needs to have a holiday. Europe needs to have a holiday. And yeah, somebody needs to. He deluded full. All right, Val. That is totally up to you. That is your opinion only, and you're entitled to have it. Freedom of speech is still alive. Inflation has risen, largely reflecting transitionary factors. Overall financial conditions remains accommodative, in part of reflecting the policy measures to support the economy. Okie dokie. Amid the progress of vaccination, strong policy support, indicators of economic activity and employment has strengthened. So, as far as I remember, as far as I'm concerned, they have seen that it is risen, but let's go into what FX Street has now pushed out. The FOMC meeting bonds is still the same, 2% target, will make 2% target. We'll prepare to adjust the monetary policy stance as appropriate if risks emerges that could impede the attainment of the Fed goals. Indicators of economic activity and employment has strengthened. Sectors adversely affected by the pandemic remain weak, but has shown improvement. Inflation has risen. But also what he also mentioned was that the housing market has had its turn down, but it's also on the way up.
The housing market in many American cities is seeing booming prices, bidding wars, and all cash offers well above asking price. And this is happening at the same time that housing is becoming much more expensive for lower income Americans and people who are still struggling from the pandemic. Do you have concerns that there are localized housing bubbles or that there's the potential for that? And what is the Fed doing to monitor or address this? Thank you.
So we do monitor the housing market very carefully, of course. And I would say that before the pandemic, it's a very different housing market than it was before the global financial crisis. And one of the main differences was that households were in very good shape financially compared to where they were. In addition, most people who got mortgages were people with pretty high credit scores. There wasn't the subprime, low doc, no doc lending practices were not there. So we don't have that kind of thing where we have a housing bubble where people are over levered and owning a lot of houses. There's no question, though, that housing prices are going up, and so we're watching that carefully. It's partly because there's clearly strong demand, and there's just not a lot of supply right now. So builders are struggling to keep up with the demand. Clearly, inventories are tremendously low. We're all hearing those stories. And if you're an entry-level housing buyer, this is a problem because it just is going to be that much harder for people to get that first house, and that's a problem. I mean, it's part of a strong economy with people having money to spend and wanting to invest in housing. So in that sense, it's good. It's clearly the strongest housing market that we've seen since the global financial crisis. And, my hope would be that over time, housing builders can react to this demand and come up with more supply, and workers will come back to work in that industry. So you know, it's not an unalloyed good to have prices going up this much, and we're watching it very carefully. I don't see the kind of financial stability concerns, though, that really do reside around the housing sector. So many of the financial crack-ups in all countries, all Western countries that have happened in the last 30 years have been around housing. We really don't see that here. We don't see bad loans and unsustainable prices and that kind of thing.
Thank you. Chris Rugaber, Associated Press.
Hi, thank you for taking my question. I wanted to ask about the labor market. Do you see things such as in the Beige Book, you saw in the Beige Book anecdotes about businesses not able to find workers, back to the labor market for fear of getting sick, childcare concerns and so forth? Do you see these as also just sort of temporary bottlenecks that won't have much effect on the long-term health of the labor market? Or how are you thinking about these kinds of issues?
Chris, you were breaking up a little there, but I think I did get your question. So, yeah, I think there are a number of things going on there. The tension between a high level of unemployment and yet many companies saying they can't find, an elevated number of companies saying that they can't find workers. So what's really going on there? It should be a number of different things. There are workers who don't actually have the specific skills that the employers are looking for. There may be geographical differences. It may also be that, for example, one big factor would be schools aren't open yet, so there's still people who are at home taking care of their children and would like to be back in the workforce, but can't be yet. There are people afraid of there are virus fears that are weighing on people, so some people don't want to go back to work. There are also a significant number of people who say they've retired. A large number of people that say that they're retired. Now, it's hard to say whether they will come back in as the labor market strengthens and as COVID, becomes in the rearview mirror in the history books, if you will. So, but clearly there's something going on out there as many companies are reporting labor shortages. We don't see wages moving up yet, and presumably we would see that in a really tight labor market, and we may well start to see that. I do think, so what will happen, what we saw during the last expansion, and it may be a different expansion, we don't know, but what we saw was that labor supply generally showed up. In other words, if you were worried about running out of workers, it seemed like we never did. You know, the labor force participation held up. People came in the labor force. They stayed in the labor force longer than expected. So my guess would be that you will see people coming back into the labor force, and these jobs will be, the labor market will reach equilibrium. Maybe pay will go up. But I do think that, and I do think also the unemployment insurance benefits will run out in September. So to the extent that's a factor, which is not clear, it will no longer be a factor fairly soon. So my guess is that we'll come back to this economy where we have, equilibrium between labor supply and labor demand. It may take some months, though.
Thank you. Heather Scott.
Quick follow, or
I'm sorry, go ahead.
All right. We have been going on for quite 20 minutes now. The question is, do we want to continue this, or what are we going to do now? Do you want to do more into trading now? That is up to you. We can continue with the meeting. Listening to what he says. I can do some commentary. What do you want us to do? That is kind of the question that I have right now. Where is the, there it is. So yeah. What do you think? Should we trade? What should we do? We already have been trading this morning, so we are even more in profits. Oh well, okay, we are 50 pips today. Nah, pretty good, eh? Okay, let's continue. The
2% target.
Question. So I actually have a couple of things I'd like to say about inflation, including reach equilibrium. Back.
Mr. Chris.
I wanted to ask, you've been hearing, of course, these concerns raised by Larry Summers and others about inflation, and the fact that they think the Fed might let things get out of hand with the new policy stance. So my question is, can you tell us what is different this time versus previous periods like in the 60s when inflation got out of control? Why are you confident with the lags in monetary policy that the Fed can get ahead of inflation and make sure it doesn't go too far above the 2% target?
Your question. So I actually have a couple of things I'd like to say about inflation, including addressing your question. So let me start with just saying that we're very strongly committed to achieving our objectives of maximum permanent employment and price stability. Our price stability goal is 2% inflation over the longer run, and we believe that having inflation average 2% over time will help anchor long-term inflation expectations at 2%. With inflation having run persistently below 2% for some time, the committee seeks inflation moderately above inflation for above 2% for some time. So with a little bit of context, we're making our way through an unprecedented series of events, really, in which a synchronized global shutdown is now giving way to widespread reopening of economies many places around the world. In the United States, fiscal and monetary policy continue to provide strong support. Vaccinations are now widespread, and the economy is beginning to move ahead with real momentum. During this time of reopening, we are likely to see some upward pressure on prices, and I'll discuss why. But those pressures are likely to be temporary as they are associated with the reopening process. And an episode of one-time price increases as the economy reopens is not the same thing as, and is not likely to lead to, persistently higher year-over-year inflation into the future, inflation at levels that are not consistent with our goal of 2% inflation over time. Indeed, it is the Fed's job to make sure that that does not happen. If, contrary to expectations, inflation were to move persistently and materially above 2% in a manner that threatened to move in longer-term inflation expectations materially above 2%, we would use our tools to bring inflation and expectations down to mandate consistent levels. And I would say, if I may, that is a principal difference from, we're all very familiar at the Fed with the history of the 1960s and 70s, of course. And we know that our job is to achieve 2% inflation over time. We're committed to that, and we will use our tools to do that. So that's a very different situation than you had back in the 1960s. There are many, many differences, actually. Let me talk quickly about the two reasons, two or you could say three, but really two main reasons why we think inflation will move up in the near term. The first is the base effects. 12-month measures of inflation are likely to move well above 2% over the next few months as the very low inflation readings recorded in March and April of last year drop out of the calculation. That process has already started to show up. You saw it in the March CPI reading, and you'll see it later this week in the PCE price data. These base effects will contribute about 1 percentage point to headline inflation and about 0.7 of a percentage point to core inflation in April and May. So significant increases, and they'll disappear over the following months, and they'll be transitory. They carry no implication for the rate of inflation in later periods. So that's base effects. The other big one I would talk about is bottlenecks. So this is what we're seeing in supply chains in various industries, and we're in close touch with all of these industries. You know, the Fed has a network of contacts that is unequaled in businesses and in nonprofits, for that matter, too. So what do we mean by a bottleneck? A bottleneck really is a temporary blockage or restriction in the supply chain for a particular good or goods, something that slows down the process of producing goods and delivering them to the market. We think of bottlenecks as things that in their nature will be resolved as workers and businesses adapt, and we think of them as not calling for a change in monetary policy since they're temporary and expected to resolve themselves. We know that the base effects will disappear in a few months. It's much harder to predict with confidence the amount of time it will take to resolve the bottlenecks, or for that matter, the temporary effects that they will have on prices in the meantime. So, I'll just sum up and say we understand our job, we will do our job, and we are focused, as you've seen, for many years, we've been focused on inflation deviating below 2%, and we used our tools aggressively to keep it back up at 2%. If we see inflation moving materially above 2% in a persistent way that risks inflation expectations drifting up, then we will use our tools to guide inflation and expectations back down to 2%. No one should doubt that we will do that. This is not what we expect, but no one should doubt that in the event we would be prepared to use our tools.
Yeah.
Thank you. James Politi.
Powell, you said a few weeks ago that it would. Thank you, Chair Powell. You said a few weeks ago that it would take a string of months of job creation of about 1 million to achieve progress towards your goal. Can you define what your definition of a string of months is more specifically? And on inflation, the FOMC said the rise in inflation we're beginning to see.
We're going down, 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 down. All right, so let's go back to what we were doing then. So, okie dokie. So we can actually go back and play that one.
Largely reflect.
But then play it from the beginning. So, cool. That's our background music for today. That's too high. Somewhere around there. Okay. Chief, what are you talking about now? No, what? I just need to readjust things. Chief, what do you think about gold? Will do. Well, let's go into gold then. Let's go to gold. So we still have 29 viewers right now. Thank you very much for following me today. My name is MBL. I'm a Forex trader. Be here to help you understanding the Forex market more better. Now we just had an FOMC meeting. This is the FOMC meeting. Fed provided nothing new, I would say. But the market direction is bravissimo. There is sound. There's no sound. Of course there's sound. Where's the sound? So if there's no sound, I can scream. Ah! All right. So as we earlier said today, let's go through what we said. I said before this live thing, at the beginning of this live, I said I do not want to cross 1766. I take absolutely no credit for the market action, but I take action for one thing. That we didn't go down. It's back. All right, cool. It's back. Are you live? Like following real time? Or a bit back behind? Cool. The other thing is cool. Good. Good. Can this play a place to sell? Just asking. Yes, it can. So what do we do now? I would advocate for tomorrow's buy zone because today's already gone, brothers and sisters and ladies and gentlemen. I should not be swallowing my words anymore. So around maybe 1774. That is not a financial advice, only for education purposes. Whatever's happened in the past doesn't need to happen in the future. Whatever money you've lost today, no, whatever money you have invested today can be lost tomorrow. Okay, just saying. So as price comes a bit back down again, that's great. It's all up to you. You have a bit of lag. You're great. Alisa, thank you very much. It's actually quite hot in here, so if anyone can open the window for me, please, that would be great, as I need to talk to you guys all the time and every second. So, I'm stressed? No, I'm not stressed. I'm just energetic. I'm just happy because we got what we want. We got profits. Maybe I should be a cheerleader one day. Okay. So, that's that. If it now falls, it will now fall. I will move all my stop losses if I had anyone, by the way, I would move them up here now. So in this area. Now, is that different? Is that really dangerous? Yes, it is. So if you have entries around 1730, some of you have 1740, some of you have. I would take them up to 1750. You can take them higher, but yeah, I don't expect this one to be lower than that. If it goes lower than that, well, then it's no longer a bull. It's no longer a bullish move. So either that or just that. I also hope maybe we can buy it in Asia Open. Maybe Asia Open. That would be great. Ten-year T-note is falling off the target of today. The today's target is met. Great. TXY is having a pullback because it absolutely crushed today's target. Okay, cool. Good. Now, my worry is, what is this then? Is this the buy? Or is this the bye-bye? If you have any positions, in here, please put them to break even. Okay? Or put your stop loss up until here. I need to do that after this live, actually. Okay? 20. Yeah. Okay. So I would put my stop loss down here if I have trades from here, so I will do that afterwards. And that is now our low that we want to hold. What else do we need to do then? Well, probably... I don't know if I want to buy up here at 21. I think I'll just leave it. And then just ride whatever we have from already so that we can trade whatever we already have. Peter on Kangi has... I used yen buy. And it was going so well, but it's FOMC meeting. Peter! I don't know if you're Kenyan, but you sound a bit Kenyan. I have a small Kenyan community, so karibu sana. Now use the yen. I don't know what... I hope that you were here in the beginning of this live, because we need to go back there. The reason why, bro, I posted this chart earlier today at 109, take profit. Okay? Where can I find that chart for you guys? Chart is at... Oh, I actually posted on my YouTube channel. Didn't I? Did I post on YouTube, my YouTube channel? Who is live here? Hey, look at that. Look at that, bro. Channel, Ivan FX. Please subscribe if you're into that thing. Not membership. Community here. Swissy, Kadian. No, I didn't. Of course I didn't. That's stupid of me. So here we are. And copy link. There we are. Here we are. I said take profit at 109.31, and I posted that today, this morning at around 10 a.m. That is 11 hours ago. Okay? 11 hours ago I said you need to take profit. So there is no buy at the moment right now, bro. Okay? I do apologize for that you see this late. So I would then say it might fall down to 108.50 or 108. I don't know which one it's going to go to, but have an open mind. Dollar is weak, yen is kind of weak in strength, so this can fall further. I do apologize for that. So where are you? Okay? You should have taken profit. And take this turn as... okay. This is business expense. It didn't kill me. You're still alive. You're still breathing. You're still talking to me. Great. Then we can work together to avoid such things ever happen again. Buying at around 109, 50, 70, 60. It's all too high, bro. You need to let the market come back down again. And I probably would say maybe even 50 pips is 50, 60 pips. Okay? Do we have a deal? Do I have a new subscription on this channel so I can follow you along? Do I have that? I hope I have that. So that I can help you out for free, of course. Come to my lives, come to my videos, ask about USDN. Right now, I'm not saying you should take the stop loss, but I hope your stop loss is close and start over again. Okay? I do have very much compassion for you. I'm not going to cry now. I'm not gonna cry. Yes, I am a bit emotional. I understand that. That's about me being energetic. It goes in both ways. I can cry. If you give me a cat right now that is crying, a baby that's crying, something that is absolutely adorable, I'm going to be weeping here. So that's not what we want to do today. Okay? Please, for the love of your trading account, for the love of your life, and for the love of our new friendship now, please have the stop loss close, start over again, and target. If price comes down to these targets again, down to these levels again, that's maybe where you can look for price to reverse. You might want to look into that maybe on Friday, maybe on Monday, maybe. Chief, an off question. Please let me know what will be the forecast for steel. Do you know what, bro? We will do that privately. All right, we will do that privately because I need to do some research on that. But off the head, it's the top. Local top, I think it is going to be. Local top. So if you see steel prices high, now I'm not saying it's gonna fall, but seasonality says it might not hold longer. Okay. That's just the top of my head. We have Australian dollar coming a bit down again. We have your dollar coming a bit down again, but still looking for buyers. Okay, looking for buyers. Pound dollar. We haven't looked into pound. Nobody's asked for pound. Why are you not asking for pound? Rampage Trading says spot 205 calls for this week. Back in those under 6.5. All right. Any news, Tom? Tomorrow. Any news for tomorrow? Well, there's a ton of news for tomorrow. I know you are about to leave. I can hear that. You are leaving me. Oh, you are leaving me. I know it's late for you guys. I know it's late for you. Where do you live right now? You live in around midnight right now? I understand that. So, for tomorrow, bro, trade balance, important for very important, as in a couple 3 hours. Unemployment rate for euro, important. That's like the military sound that I'm trying to do. Consumer confidence. Core personal expenditure, gross domestic product, all of this is important. Jobless claims not as important as it was back then, but still fair enough. So a very eventful day. Though this might move the market, it might not move the market. But what I'm going to tell you right now is that you need to be at the charts. You need to be confident in your trades. Don't freak out. There's nothing to freak out about. But don't make stupid mistakes. Okay? Don't trade emotionally just because price is rising. Just because price was rising right now means that you should have bought in this area. All right? GJ, please. I can't at the moment. We did not get our buy zone for today. It's going a bit higher, and I have also highlighted this area as a potential down move. I'm not saying it's going to go down from here, but it's a potential place for it to go down. All right. We have been here for 1 hour and 31 minutes. Go back to the beginning if you have not seen the beginning of this live. I mentioned went into when to look for interest rates. How do we know interest rates is going to rise, it's going to fall before it actually even does it. We also went into the plot chart where we're looking into what the Fed members are thinking about the future. So then we're also looking into what the Fed said. The Fed and the Powell said nothing's particularly new. Everything is just in line with what we were expecting. We went through what 10 banks was expecting before this one. So yeah, if that's something you haven't watched already, that is totally up for you. If you are trading GJ, we were expecting this price here today. We didn't get it. It just went a bit higher. So what are we doing then? Where is it going to go? Well, target for the week is 52.23. The target for that would turn up to be probably the sell zone for May. I don't know if that's going to happen, but you know, we might end up something like this. Okay, that first week of May we might fall. First week, I'm just saying May. Can we target? Can we do pound dollar? We will do pound dollar. So currently, GJ is currently just running away from you. Is there any other methods to look into this buy thing here? No, it's just very aggressively higher. But this red line here, yeah. Maybe if we come down to 150, 120, maybe the buy, or 150, 100, and then going higher. Can GJ fall to 151.06? Yes, it can. That is absolutely within the possibility. So, can I get some feedback on today? This is my first FOMC meeting minutes with Fed Powell.
The Federal Reserve System works every day to support.
Yeah, of course, I forgot to do that. Did you guys like today's live? Like, I can see your likes, but your personal feedback with your own words, you know, I want some feedback. This is my first one. How did this one go? Was this okay? Was this, you came here and you found something fun, you found something to laugh at, you found something to pick at, I don't know what it was. You found knowledge, you found information, you found what you wanted. Is there any feedback of you today? That would be highly appreciated. Just said you loved it, that would be great. I'm not here for criticism, I'm not here for Karens, I'm not here for Kevins and whatever you call them, Richards. I'm only here for your honest opinion, and if you want to troll me, that's okay, but yeah, it was great, it was good. Harold is still here, is still alive, that's pretty good. And I'm dying, at least as it seems at the moment. So we can do GU as of last thing. Can we target 141? Yes, we can. Can we buy it at 39.25? That's a bit high, but yeah, I would probably take maybe 119.16 instead, 39.16. Your comments in the middle was great. Okay, thank you very much. So, should we do it again? Should we do it again? Yes or no? That is the question. Today's poll, powered by Jerome Powell. Jerome? Yeah, Jerome. Today was the best stream so far, Shaw. Well, thank you very much. I appreciate that. So, people who are still left here in this group says yes. Most of you say yes. Yeah, that would be great. So, as we now are leaving this live together with Fed in the background. I highly appreciate every single one of you. We are family. We are bros. We're making money together. I only give my personal opinions. You do the trading. You do the analysis. You do the head. I'm just telling you where we generally can go. April has been absolutely fantastic. Absolutely fantastic. Analysis-wise, trading could be better. I'm still human, as always. So, until next time, probably tomorrow, we'll be having another live. But yeah, until tomorrow, have a great day. Join the invite link. Join the Discord if you're not there already, so that you can also talk to me every day. I'm live. I'm probably going to be live tomorrow in the Discord group. I'm probably going to be there in London Open, talking to me. I can give you advice. I talked about interest rates the other day. Today, I think it was yesterday. I talked about interest rates. I give out quality content to you guys. Interest rates, nobody paid for it. How does FX prices? How does interest rate affect FX prices? And yeah, that's you can actually need to go to. You can actually get that at university level, and you got that. You got that from me at free. So have a great day. I see you later. Until next time, let's go to war.